Do 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 do. All right. I know I did a podcast like just I think a few days ago or yesterday, but I thought about doing another one to recap a few important charts just to complement the latest one I did. The latest one was about the net small speculators. So that's a total long minus the total shorts. And when they're above, when the net is above the total shorts for the non-reporting small speculators, usually gives you a great signal that the momentum is going up for gold. So I decided to deep dive a little bit that. I got some guys from Gold Tent. They said, "Oh, maybe did you try with open interest?" Biko, he asked me that, and I said, "Yeah, sure." And always good to rehash some new ideas and add that to your weight of evidence. See how that pans out. So here is the net non-reporting. So I get all the information. The CFTC is on QuantDL or TradingView. It's great. So you could go get the futures only data series, and then you get open interest, commercials, law, short, long, non-reporting. So I took the non-reporting, the net non-reporting. I took the long non-reporting minus the short non-reporting divided by the total open interest, and that gave me that ratio here, that black line. Added to that, I put the MACD, and what you see here in the background is gold. Pop a chart right away. You could see how the net position, how it follows gold. Is it following gold price? Is it gold price following the non-reporting? Look, it doesn't matter. You're trying to look is for relationships. You're trying to look for divergence and anything that could add weight of evidence that a move is about to end for that specific time frame. Just like you use any other indicator, I'm using that ratio as an indication. Is there enough steam to continue to plow ahead, or there's so much divergence being built in that indicator that gold price is giving me a sign, look, you're done, you're going down. So here it is, pop up in the arc. If I see it, nice rounding base, a little stretch. I have my rising channel right here. I had some important, I have even here a symmetrical triangle, a lot of touches, actually broke out. And right now it's going to test that horizontal breakout line. Is it going to retest that breakout line, then go up, or go up, touch at that top of the channel? That's a whole bunch of scenarios that could happen. So this is my case. As I see the MACDs going up, so my case is that we're going to go through, we're going to hit that. That's going to be resistance. We're going to go back down, go through, hit that. Even here I have a nice descending channel. Go through, hit that one last time. In that bullish divergence with gold is going to give me enough juice to go to in between 1825 for a monthly close, either in April or May, and probably a spike, a candle wick that's going to go touch that 1921 target. So that's how I use that as an indication. Actually, so it's like three-way, using it as an indicator, and that's the indicator of that indicator giving me more clues. Because you got to be careful. When I see that, I also see long-term bearish divergence. So when we hit that top of that channel, until this resets, or let's see, maybe it's going to break out of that channel, there's going to be starting divergence. So we might even have those net non-reporting actually start going down. That's my indication. Maybe it's going to go down even to that lower band. And if that keeps building up, then that's going to create bearish divergence of gold, and gold might be going down. But that's not the test case for that. The first test case is just to see, is there enough fuel of the non-reporting to go up? And we're probably going to get our answer very soon. All right. So now let's cover another chart. And after that, I think I have one more to show you, or two. It's going to be real fast, but it's really going to crystallize what I see as remaining horsepower in this latest bull surge for gold. This is just the net, the non-reporting net right here, not the ratio. You see it's going up, just hit that lower band. When you're hitting at the bottom here, usually matches well with the bottom in gold. Right here, we had some bearish divergence with the MACD of the net positioning of the non-reporting. Oh, going down, gold's going down. Net reporting going down, starting to build that arc. Here, another signal of a top right here, bearish divergence of gold going down. And when we started hitting that rail that's starting to be defined here, would have been a great opportunity to enter right here. But we're starting to build bullish, hidden bullish divergence of gold. So the indicator of my non-reporting, net non-reporting, sorry, sometimes I misspeak, little dyslexia going there. Bullish divergence, hidden bullish divergence of gold. So gold refused to go down. And here we're stretching that indicator. It gives me the impression that we have enough fuel to touch that top rail, go even through that bowl, and have the net non-reporting small speculators go up, driving the price, gold following that price action, going all the way up. So right now we had the ratio that giving clues that we have room to go up, and just the net non-reporting small speculators, another one going up. So what could happen after we go up? And if we can't surpass those previous highs on the MACD, well, we're going to start creating bearish divergence, right? Higher highs on the indicator, lower highs on the MACD, and then we'll be signaling that we'll be entering a correction period. Still fuel to go up, but we are entering, again, we're going to have a need to correct eventually. All right. Last two charts is with regards to how to pinpoint how to take profits. No matter, well, let's say you have a position and then you want to know, so some people, you have positions you never want to sell. It's you're going to hold forever. This is a type of a tuning that could help position traders maybe take a little bit off the table and add lower on, or this can be great even for swing traders to respect the monthly charts signals to know, okay, this is really starting to be a hard top. Because remember, anything defined on a monthly chart is more powerful than anything defined on the weekly chart. Just as the weekly chart, whatever defines as signals, reversals, is going to be stronger than the daily chart. So this is my distance from the moving average, monthly chart, 6 months, 12 months. And in uptrend, you rarely touch that 12 months. So once you start up, you go above, you rarely go down. And that 6 month moving average, you do have regular touches. So these usually are great entry points in uptrend. When you start touching, the price action starts touching that, you should be adding there. And then I'm defining resistance right here. See that line? So sometimes we had closes that came up here. On the shorter term, these ones we had difficulty. So if we have a monthly close above 1825, either April or probably May, we're going to be going up here, right here. So we're going to have, we're going to hit that monthly defined resistance line, distance from the moving average right there. And that'd be a great entry point to take off some of the table. Or unless you want to hold, you hold, but expect some type of pullback close towards that 6 months moving average right here. That number every month is going to keep going up and up. So this for me is my low water mark. We should not be having closes below that 1577. And as we keep going up, that level should be going higher and higher. So any profit stops between 1825, and remember, this is all based on closes. We could have a spike, we could have a wick that goes through and goes up on the intra month. So during the month, we might actually be a lot higher, only to close below that resistance line, and we could be hitting 1921. So that's pretty much the range I'm looking at to take profits. And if you want a little bit more weight of evidence to that, this is gold's historical monthly analog chart. And I did Fibonacci from the highest point, the highest candle. So in January 1980, 30% gain, all the way down to zero. I just put the percentage gains. I didn't put the months where it lost. I just want to see where statistically I had more chances of getting a candle, monthly gain candle. Most of them, they're below the 23.6% Fibonacci retracement. So most of the months, especially in a bull market, you're going to get them, you get about 7% gains per month. the close, open to close. So don't get greedy. That's what you should get most of the time. And you could have a whole bunch that are consecutive in there, 7%, 5%, 3%. And here's the outlier zone. So up to the 38% retracement level, there's a few times, and it's rare that you have two that are glued in it. See, this one barely. Usually the next month you're back into the in the bulk of the bulk. So right now April seems to want to close into outlier, a great month. I wouldn't expect another 11%, 10% gain next month unless we're in a crazy bull trend and it needs to digest those gains to adapt. So why not? Maybe we'll get another month above 7%, not in the bulk, but in this outlier area right there. So that's how I do it. I think if April could close a little high, we could get probably, even if we don't get an outlier month in May, that's going to be enough to have a percentage gain to get us to that all-time highs, guys. All right. Hope you enjoy it. And don't forget to like and subscribe. Ciao, guys.